Hello and welcome to this edition of the Intermodal Logistics Podcast. I'm Kevin Baxter, joined by my co-host today, Intech Logistics CEO Rick Legore. Hey, Rick.
Hey there.
We have a little bit different arrangement here today, but we do have a familiar guest from, let's see, 8 months ago, something like that. Yeah.
Mm-hmm. But last time, we had to go all the way out to California to get someone in that lives an hour away from us.
Yes. And it's Tim Denoyer with ACT Research, the VP and Senior Analyst there. Tim, thanks for joining us again, and thanks for making the drive. Not too far away, but a little far away.
Thanks for having me.
Yeah.
The highways are a research experience right now. Things are slowing down a little.
Well, yeah, let's start with that. When we first talked, when you came in, you mentioned how you're noticing some differences just doing some field research on the highways. What is it showing you that you're also seeing in the data?
Yeah, I've seen a real strong increase in spot volumes and spot demand and rates on the truckload side. Mm-hmm. We wonder exactly what's behind it, because the overall economy is not doing wonderfully. It's doing okay, but some of this surge is a supply side driven. Actually, there's a lot of different capacity constraints at play, but a lot of this is the cost of diesel has gone up, and that I think is not driving not only truckers but regular motorists to drive a bit slower, and that sort of slowing everything down in the highway network. Mm-hmm. And that additional capacity constraint I think is pretty fascinating, and suggests that truckload capacity is even tighter.
Yeah, so the capacity question with trucking has been sort of, even before diesel became sort of the A1 issue.
Yeah.
The capacity question with trucking has been related to the rates. The spot rates have been kind of climbing for a while. Rick, you've said quite often that not seeing the volume to back that up. So it's
not seeing the volume. What I'm seeing is hearing a lot of what the FMCSA was, or what they're doing today. And some of the things I knew that they were doing, but some of the things also I didn't understand the magnitude of it until I was off in a conference in DC a couple of weeks ago. But the FMCSA, I mean, they really truly believe they're going to get 8 to 10% off the road drivers, and that's going to be through English proficiency, non-domiciled CDLs. One of the things, and you're talking about, maybe it's not drivers in general, but overall capacity slowing down, and also the ELDs, which I didn't realize that. One, I didn't know that there were 700 plus ELD companies out there. And number two, I thought ELDs, you couldn't actually go ahead and bypass them in some form or fashion to go ahead and change the hours of service that the driver is actually recording. And basically, I mean, this is, when anybody tells you everything is true or nothing is true, it's usually false. But almost every ELD out there has some type of issue that the FMCSA is saying you are not compliant with the regulations. And so there's a number of ELDs that will be removed, but also that's going to remove a ton of capacity as well if people are actually working around the system, which sounds like they are.
Heard a lot about log toggling lately, where basically you have two ELDs running at the same time, and I don't know how many of these self-certified software systems have this ability, but yeah, I think there's a bit of fraud going on.
Yeah, I didn't realize that actually was a situation. I knew there were some ELD issues, but I didn't realize it was, well, one, there were that many, and two, they could be, worked around.
Yeah, so there's a confluence of capacity constraints.
And then I also didn't realize how many thousands of truck driving schools are out there.
Yeah.
And so that was the other thing. The FMCSA is they're shutting down these schools, and then if you got your license within that school, then your license is in jeopardy as well. So I've been doing this for a while. I believe you've been doing it similar time, but you've always had a different perspective than I have. I don't recall seeing such an issue of supply being pulled from the market.
Yeah. I mean, I've seen it a couple of times in my career, and COVID is one of them.
Right.
I think if you go back to 17, 18, when the baby boomer generation was retiring in a pretty big way, we had a pretty big cycle around that. This is much more proactive by the government, so I think it's very different from that perspective. But what I can share is we have a survey of for-hire fleets. It's mostly medium and large fleets, big fleet perspective, and one of the more interesting components of our freight indexes is the driver availability index, and that just been stubbornly high for the last few years. 4 years in a surplus,
Right.
but just these past couple months, it has swung really hard. Clearly, there was a chilling impact even before that, and
Right.
And those other initiatives that you mentioned were already having an impact as well. So the cumulative impact is starting to really tighten the truckload market, and it's not just drivers; it's equipment as well. Equipment production is really low.
Right. So where's that equipment going? So I continue to see the Class 8 production isn't to the levels where people are thinking that should be, but all this other equipment that's being taken off the road as drivers are being taken off the road, where are those going? I would imagine it's hurting or helping pricing somewhere along the way.
Yeah, there's a mix of things happening, right? But the younger end of the used truck market is starting to do really well. Starting to see used truck prices rise as a result of what's happening. New truck orders are starting to pick up as a result of the jump in spot rates. But it takes a while for new truck production to ramp up. We're at the point where within our shop, when we're talking about the Class 8, suggesting we need more trucks,
Right.
colleagues are kind of saying, we can't build more trucks from here. We're kind of maxed out in terms of what.
And then where's the drivers coming from?
Well, driver pay is going to have to go up as well. Yeah, that's. I think we're starting to hear that pressure in the market already, and we're we're back where we've only been a couple times in the past decade.
Right. So that's the supply side. But you said you were looking at the demand side as well within all the graphs and charts and data points that you guys have. Where are you seeing that?
Yeah, well, demand has been, a pretty bad story now for a few years.
Yeah, because I'm not seeing demand or we're not seeing demand. We're seeing, if you're in flatbed, that seems to be demand driven.
Yep.
And
AI, data center, construction, all that kind of stuff.
Infrastructure, all that kind of stuff.
Yep.
But in terms of regular dry van, it seems that, again, it seems to be more of the supply of that side, and the demand it's not really increasing.
Yeah. I think that's absolutely valid. I think there is some interesting sort of the latest data points in March look a lot better in some of the truckload data that we look at. We've got a number of good partners supplying truckload data, and it does actually, just March, looks better. Clearly, there was a lot of tariff headwinds and a lot of other headwinds, pre-war, and clearly we're cautious about the economic outlook for the consumer, given the higher cost of fuel. But it's not all negative for the U.S. economy. I mean, we're obviously a big energy producer, and so it's a little bit of an offset there. And then that pinch on the supply side actually, I think, generates some demand. And this is, call me a supply side economist. Fine. But I do think the supply is the bigger, the more important factor a lot of times like this, because one of the reasons we're seeing good demand in freight, and you're seeing postings on the DAT web board up, I think it was up about 70% the last couple months year over year.
Okay.
So big increases in the postings of loads. That didn't mean until recently that a lot was moving. So some of that was just because of weather effects and that type of thing. But it started to really bounce back, and some of that bounce in March was probably some recovery from freight that was slowed down by weather earlier.
January and the first week or two of February were not great.
Yeah. And so for the quarter, I don't think there was a ton of growth in overall truckload volumes, but I think there was a little. So. I think we're starting to turn the corner. I'm not saying things are particularly strong yet, but I do think capacity is going to contract this year, and it's going to be tough for capacity to grow next year because equipment costs are going up because of regulations, and so those constraints on capacity can continue to support for higher demand because where capacity is going away, someone still needs all that freight.
Yeah, absolutely. We're hoping that anything over 750 miles, they say, we want to take it intermodal. We're seeing that in some of our customers because they are seeing, they're seeing an issue getting trucks. They're seeing an issue with the pricing. And then we have other folks that are calling in asking for, hey, what can you do on the intermodal wise? So we're not necessarily seeing demand, spike or make a hockey stick on any graph. But in terms of modal conversion, if intermodal is going to shine, this would be the time for it to shine.
I mean, our analysis would certainly, from a third-party perspective, support that. I've never seen intermodal at such a considerable discount to truckload on a national average basis. It's sort of screaming to send freight to intermodal right now. It makes a lot of economic sense, and I guess we're just sort of waiting for it. There's normally a lag with this kind of stuff. I think when I think about the timing of like when should this happen, it's like it makes sense that here we are in early April where it's not the seasonally best time of year, right? That hasn't hit yet. It hasn't fully broadened out yet. There's LTL is still pretty soft right now as well. The West is sort of just recently picked up, whereas really the Midwest kind of has led this recovery, and the East Coast. I think it will broaden out as seasonality improves in May and June. And I think we might see some of that volume strength start to show its face pretty soon here. And particularly, every year we are always interested to see what happens with road check in mid-May. I think it's the 12th to the 14th this year. ELDs are the main issue that the troopers are going to be checking for. Right. And so that's going to be a capacity tightening event on the highways. Should send some freight onto the rails as well.
Only hope. We've been tracking this data for a long time, and in terms of lag, we normally, not normally, what we see is it's usually about a 9-week, plus or minus a week or two, lag between what happens in truckload. And I wouldn't count January or February as when it started because I count that weather. I consider what was happening in the beginning of the year really weather related. Yeah. So then let's start talking about the mid to end of February. That's when it really started to flip. Where it became at least in my estimation, not a weather issue. It became more of a market issue. Mm-hmm. And so that's my line in the sand, waiting for 9 weeks after about the 15th of March, or 15th of February, I should say.
Now, the rail volumes were a bit better in March as well, right? I think some of the
they're still recovering. I mean, I think when the numbers come out on a year-to-date basis this week, we'll probably see it down about 4% on a calendar or a year-to-date basis, somewhere around 4%. So it's still
better than it was.
It was, but it came off in it was in a bad situation because of weather in the first month and a half, really. So we'll see some differences there, and hopefully we'll see it flip around. But what else is going on the truck side? Well,
it's been fascinating recently to see how the manufacturers are trying to turn things around, and that's a big question that everyone has. Is that now that things have improved, can manufacturers ramp back up? And with costs going up next year, there's a lot of concern about that. We're now at the point where we've had such strong truck orders in the past few months that there's fewer and fewer build slots open for this year. Okay, we're getting to that point where if you want a 2026 truck, it's 27 model year, you really need to order it soon. And we haven't gotten any real final guidance from the EPA about the 2027 regulations, but we've heard from the ATA that they're still likely to happen in a revised way that reduces the costs and removes a lot of warranty costs. But still, it looks like there's still 5-figure type of a cost increase coming. Okay. Something in the $10,000 to $15,000 range is probably where we end up in terms of where truck prices go next year. And these are rules that were actually set in motion under the first Trump administration back in 2020. Yeah, maybe 19 was when they were initially started, but I forget exactly the timeline. But I think they were finalized under the Biden administration. They've been sort of challenged at being reevaluated, but it's basically a 7-year rulemaking process, and there's very little because of the details of the Congressional Review Act. You can really only challenge these for the first 6 months or so after they're put into effect, and that clock expired a few years ago.
Okay.
So there's only so much we can do to change these rules at this point, and so we're probably going to have a low buy next year. So people are going to want to add equipment capacity, to the extent that they can this year, or those costs go up. But probably going to have another pinch on equipment capacity next year is the real concern.
Okay. Yeah. Do the tariffs play into some of the reasons of price increases and just an overall manufacturing pinch?
Well, the tariffs actually have a couple of different effects on, and generally positive for the freight cycle and the rate cycle. The reversal of the IEEPA tariffs has brought down the overall tariff rate a little bit.
Right.
And we think that the Section 122 tariffs that replaced them are also legally questionable, but only last 150 days. So they'll be done by late July, early August. And so we'll continue to see tariffs come down. So I think that is good from a consumer perspective and offsets some of the inflation pressure we're seeing from oil prices going up. So it neutralizes that a bit, which is helpful. And before the Iran war, I would have said, that's a positive from a demand standpoint, but now it neutralizes the negative. But also, we're still seeing a fair amount of tariffs on equipment. So some of the steel and aluminum stuff is getting moved around a little bit. There's going to be some new exemptions that are in the news the last couple of days. But in general, we still have a fair amount of tariffs on equipment. And the 25% tariffs on Mexican trucks went into effect late last year. And so that's it's a third of our production capacity that is facing a pretty considerable tariff on the supply side. So again, another capacity constraint.
Goodness.
And what's the condition of what's out there on the road right now? How necessary is just replacing what's already there too?
The average age of the tractor fleet is a little bit above average right now. I think depending on how you cut it, something like 5.5 to 6 years is a good long-term average age. And I think we're 6.1, 6.2 right now. And the day cab fleet's a little bit younger. I think the sleeper fleet's a little bit older because private fleets have added a lot of day cabs over the past few years. And so that one's a little bit younger. But the fleet is in a place where it does need a little bit of refreshing of replacement. Yeah. And replacement demand is going to be rising over the next few years. So just because the fleet has gotten bigger.
Right.
So you mentioned private fleets. That's the other sort of piece of the capacity equation. Last year, that was kind of a big topic where there seemed to be a pretty good chunk that was just staying in the private fleet sector. Is that continuing on right now? And is that trend ever going to change, or does it look like that's kind of here to stay?
I think it has reversed, actually. And if you look at some of that, we did see some early results from the NPTC survey, and they sort of suggest that they're continuing to grow. The day cab data that we see from the manufacturers would call that into question.
Okay.
And what we can say is that last year we built fewer trucks than we needed to replace, just to sustain the fleet. So the fleet contracted a little bit, like 1%. But after adding a lot of day cabs and day cabs being above average from the 2022 to 24 period, they were below average in 25 and even into 26. And so, and we're at low levels of production, and day cabs are a relatively low proportion of that. So we can say pretty definitively, while private fleets are the only buyers of day cabs, of course, a lot of people do like day cabs. They are the biggest buyer of day cabs.
Right.
And so, that's a group. But so we can say from that data pretty definitively, we have to caveat it a little bit with, of course, LTLs and other people buy day cabs.
Right.
And trades fleets.
Right.
But we're pretty confident in saying that private fleet capacity is actually contracting right now, and that's one of the sources for higher demand. An example would be Quickway, part of Kroger's supply chain that recently liquidated in a small bankruptcy. That freight had to find a home in the for hire market, and so it has, and that's one of those generators of demand, just not necessarily from economic growth, but just from a shift.
Right.
So the other part you talked about, your survey is dealing with the large carriers mostly. What about these smaller ones? Because we've talked with a couple people over the last few weeks, and with the fuel prices all of a sudden cost to drive quite a bit higher. What are you seeing with the small, like individual owner operators or the small carriers?
Yeah.
For that and after that, I guess.
Yeah, it's a good question because there's a couple answers in there. One of the first things we heard, we have a good local insurance agent down in Columbus. I'll give a shout out to Marvin Johnson, our buddy Cody Johnson down there. Okay. They talked to a lot of small fleets on a pretty regular basis, and said there was a lot of stress right off the bat because in the truckload spot market there is not a fuel surcharge explicitly most of the time. There are some, but essentially, that's a market rate that's got to include your fuel. And so when fuel prices jump, the truckers initially take it in the pocket. And that was really painful for small fleets, especially because there's a lot of fleets that have been living on the edge. And so the customers of our insurance broker friend were really struggling, and a lot of them folded up shop, and it was a big shock. Now, within a couple of weeks, sort of the tables turned pretty quick because that capacity shock, and I think, as I said at the beginning, I think there's a little bit of just different driving behavior out there on the highways that has reduced capacity a little bit. But maybe the combination of those two things has tightened up the market enough where very surprisingly, spot rates have risen more than fuel costs at this point. So that shows a level of tightness and sort of pricing ability in the truckload spot market, which is an extremely competitive market, that can only mean that the balance has shifted.
Yeah. So have you seen anything else? We've had diesel up around this high before, but pretty sudden that it's gone up. Have you seen any other sort of immediate implications from that? I guess we're up about $2 a gallon since the beginning of March or so now.
Yeah, I mean, we track lots of different types of equipment, so we've been getting more equipment questions on tank trailers and that kind of thing. Energy related stuff. There's definitely more. There's activity there. Not a ton. There's a lot of drill uncompleted wells out there that go first, and so it doesn't drive like energy activity like right off the bat.
Right.
But I do think that there's going to be more use of truck equipment in the energy patches, and so that's another sector at the margin that does use tractors and will take some off the highways.
So when we were here talking, not here, but when we were talking together.
Here on the podcast.
Yes. In September, we were talking. So the two major things that we were looking at was IEPA and what was going to happen to that. And we were talking private fleets. What should we be talking about? What are the next two things that we should be looking at, you think, based off the data that you see?
Good question. By the way, we were right about IEPA.
We were right on target.
It took a while, but it did. We were right. Yeah.
Not to pat ourselves.
I
think even then we thought it might happen, within a few weeks or a month or something.
There's a lot.
It took a little bit longer.
Yeah. A little bit longer.
I think the next tariff strategy is the Section 301 stuff, or maybe it's 310. I forget which one, but essentially it's going after individual countries for unfair trade practices, which is what the first Trump administration did and what a lot of the tariffs on China still are today.
Right.
And it seems like, after having the IEPA tariffs were unlawful, and probably the Section 122 ones that are in place now my guess is will eventually be reversed as well. That's going to be one to watch.
Right. You were right on the first one. What are we going to say about this one?
Well, yeah, if you want to go into the balance of payments, the different terminology in Section 122, it does suggest that we've done this. Certainly not a blanket approach is not likely lawful. There might be some cases that those could be okay under the law, but it doesn't look like it, across the board to me. And so that's going to be a big question. The whole the refund process is going to be one to watch. It's like 160, 170 million refunds that are coming.
Right.
And the lower courts have already ruled that they need to come. So it's not really a question. It's just how are they going to drag their feet? Yeah.
Yes. How is that going to happen?
Yeah. But certainly they were able to collect them. So any sort of excuse like, we can't give them back, it's incompetence, I don't think is going to fly.
Right. Well, we keep on letting people go out of the federal system, and it'll be difficult to be able to get it done. I saw some report yesterday that the head count in the federal employment is down to like mid-60s, mid-1960 level.
Yeah. Pretty stark.
Yeah, I think our population has grown significantly since 1965. So I think there's a lot of support that, granted, I would hope that technology is a little bit better than what it was in that time period too. But there are a lot of things to look at. But yeah, it'd be tough to be able to drag your feet for too long.
Mm-hmm. Yeah. So there is a lot going on. Of course, the Iran war is one that's you don't forecast these things as a rule. So it hasn't been going wonderfully. And every day that it goes on, it's worth saying it does tighten the market further, I think. And these high fuel costs are more of a pinch on supply than demand, in my view. And I think that's interesting from a truckload perspective.
And even if the Strait opened up this evening, there's been several weeks that tankers haven't been moving. So it's not like they're going to go into hyperspace and immediately go from the Strait to their final destination and be distributed through the various countries that need the oil.
Not to mention infrastructure that's been damaged.
Yeah, so it's not an immediate fix. So is there any
fascinating things in looking at markets right now? To me, is that West Texas is at a premium to Brent crude.
Right.
Which I don't think I've ever seen before.
Right.
And it just tells you people are buying American oil, but I mean it's one of these things that tells you this is not going to heal fast. Yeah. Yeah.
So to think that the plus 50% increase that we've had in diesel fuel, where we stand today versus where we were last year at the same time, it's going to take longer for it to drop down to a more normal level than the time period that it increased. So it increases in 3 weeks. It's not going to drop back down in 3 weeks. And probably that bottom is probably will be at a higher level because now people see the risk in the overall supply chain of fuel, or I should say oil.
Yeah. Yeah. And it's going to take years to rebuild strategic reserves and things like that. I think that's higher for under. Not to continue to talk the intermodal book, but yes, the fuel
doesn't hurt.
The efficiency advantage should come into play here, and yeah, I think that the fuel cost advantage could be a big addition to the cost savings.
Well, as I've said, I put an article out last week. I mean, intermodal has been stuck at about 6% of market share for a few years now. This is the time for it to shine if it's going to shine. There's other things, and if it's not shining, there's clearly other things that are not structurally correct, or shippers have a very long memory of what happened in 2022, or actually more 2020 through 2022 in terms of service levels that are maybe be holding them back a little bit. But, we just got off of Easter Sunday, and as I used to have a boss that used to say, you can't build a church for Easter Sunday. And I translate that into you can't build a railroad assuming that it's going to be a pandemic. And it takes you a few years to go ahead and, plan it out, have the money to do that, get the approval, which, by the way, I don't think any capital committee would approve. Hey, I need this additional money and I need these additional lifts and I need to expand the ramp structure that we have because I'm planning for a pandemic in 2020, 2022. That's not going to happen. So to think that the railroads would be able to perform to the level of those volumes that were coming at them, it's just not. It's not feasible. And then to go ahead and say, well, because of what happened over 2020 and 2022, well, I'm not going to put my freight on it because I had a bad experience. Then that's not. It's not. There's needs some more thinking and analysis around that than to say that's the case.
There's a lot of just sort of knee-jerk, if you will, type of thinking. And once it went up to the senior CFO level back in the pandemic, there's a lot of decisions got made that take years to reverse. And that's one of the reasons we've had the longest for-hire downturn on record since 2022.
Right.
But that doesn't mean it's not going to turn.
Right.
And it actually probably means that the next upcycle could be longer, assuming it's not sort of more violent to the upside.
We've seen a lot of it. I mean, there's been more disruption in the last 10 to 15 years than there has in the prior 40 to 50. Mm-hmm. And more disruptions and frequency. And, you just get through one and maybe it's just 18 months or 24 months and then all of a sudden you have another one. It doesn't seem to have any seasonal patterns that we were so used to for so long.
Yeah. The seasonality is still there. We still see some of it, but it's shifted in a lot of ways. I mean, winter's getting tighter with a lot more weather events, right. and the reefer market. There's things have definitely gotten tighter in January and February. Can't imagine there's too much refrigerated going on anymore these days, but
not really. Wish there was, but there.
Yeah, that's a particularly tight part of the truckload market, and
yes.
I think that's helping to drive that drive-in momentum as well, which it's all connected.
Yes, it's all connected. All connected. So you talked a little bit about the tariffs and what could happen at the end of July, beginning of August, and what that could do to us. Is there any other things that the data says, hey, let's look at these other A, B, and C events?
I mean, we're always excited about any potential recovery in manufacturing, and we've seen a few good months of ISM data.
We have
seen broad strength, and I do really worry about that increase in interest in mortgage rates that we've seen in the past few weeks. That may cool some of that strength in manufacturing. I think something like half of U.S. manufacturing is related to housing,
right?
And so we obviously could use a lot more housing, and then could use a real housing cycle at some point. But we need interest rates considerably lower, and we need a positive resolution out of the Middle East before that's a real possibility. We obviously still have a lot of data center demand, and that is helping. I think it's helping things in the flatbed market here and there, and other parts of the vocational truck markets. That's definitely supporting demand overall. Doing data centers are not the biggest freight generators, but more than zero.
Right. Yes, more than zero.
Well, speaking of the interest rates, the Federal Reserve question is sort of the other one that's out there. Will they just get cut no matter what if Powell's replaced at some point here in the near future? Though there's questions about when that happens as well.
Yeah, it'll be interesting to see Kevin Warsh's first decisions because one thing that our economists have reminded us is that it's not just a one-person thing.
Yeah.
If you look at what the Fed did back in December, they renewed all the governor's terms for 5 years, so there's no more replacements.
Right.
And so there's going to have to be a consensus that's built, and with oil prices over $100 a barrel, and inflation likely to pick up, certainly at least at the top line level, if not core inflation maybe not too much, but core inflation is probably going to pick up as well. And so that's a real tough environment to cut rates into.
Yeah.
And I think markets have gone from expecting maybe 2 rate cuts this year to more like 0 to maybe getting a little concerned that we're going to have to hike rates. And I think that's one of the reasons that the stock market's come down in the past few weeks. I'm not sure we're done with that adjustment process.
I haven't paid attention to all the changes at the top for the Fed, but it does seem that the last few, the market has always kind of challenged the new Fed chair in some way. Some way, there's some movement that seems to be driven by those initial couple 3 months when they step in.
Yeah. He certainly stated that he wants to cut rates. And made the argument that if we have productivity-led growth, we should follow AI and not the old models.
Right.
Yeah, what you were talking about with the consensus, the last meeting, I think there were more people in favor of not cutting than the prior meeting, which was part of the whole conversation about the replacement in the first place, too. So yeah, I guess the consensus building or strong arming or whatever you want to say will be a bit of a test if there's a firm resolve there to cut.
Yeah. No, we've been spending an inordinate amount of time studying energy infrastructure in the Middle East lately.
Right? Yes, we have. Which is challenged. We've all figured that out.
What other ways do they have?
Well, before we let you go, tell folks a little bit more about what they can find from ACT, where they can find it, and all that.
Sure, thanks. Yeah, actresearch.net is our website. We forecast and analyze kind of everything commercial vehicle transportation related. Truck production is sort of one of our key wheelhouses, and one of the things that we use to analyze lots of different logistics sectors. A lot of our, we show up with a lot of our partners, good partners like yourselves, like CAS and DAT. I write the CAS report each month, and I'll point out, not to pat myself on the back again too much, but if you go to the CAS website and look at the latest report, at the bottom we do talk about our process and how we use commercial vehicle production data to drive rate forecasting, and it's a little bit negative because I put up a sheet from the freight forecast 2.5, almost 3 years ago, when we wrote "lower for longer" was our headline, and we explained that there were just a lot of trucks being built, and the point being that it works, right, and that it's reversed at the moment, and we've had at least 6 months or so with truck production significantly below replacement, and so we've had that refresh that we've been really waiting for a few years. So yeah, I'll be speaking at an IANA event in May, and a SMC3 event in June. We have our own seminar in August in Columbus, Indiana, which is lovely having you guys.
Yeah, love to be there.
We're going to get you to speak again.
Okay, it's been a while. It has been a while. Probably a decade.
Something like that.
Yeah. Love to. So we can make it happen.
Yourself, Rick.
Well, yeah. Yes, I am. The white hair does it. I walk in the room. You don't need to have a guess. So anyway, that forecast will be pretty good for most. So anyway, and then you'll be in IANA again in September?
In September too, yeah.
Okay,
yeah.
All right.
We're mapping out the year for you.
New Orleans in May, and then, LA in September.
Okay, excellent.
Yeah, well, Tim, thanks for making the drive again, and we appreciate having you on again, and I'm sure we will, we'll look for CAS again coming out soon, and I wouldn't be surprised if we cross paths again.
We're not too far down the road.
Yeah. No, not too far down the road.
Maybe we should find a third city to do the next podcast.
There we go. Go. We'll just meet on the south side. We'll have the traveling version.
We can do that.
Yeah. When it's a little bit nicer, of course.
Well, thank you for having me.
All right. Well, thank you for coming.
And thank you for joining us on this edition of the Intermodal Logistics Podcast. Please do rate and review us wherever you get the podcast, like and subscribe, and drop a comment. We are happy to address any comments you have. You can also email us at podcast@intechlogistics.com. Longer than a regular comment, you can visit www.intechlogistics.com. Tech Logistics. the company. And for Rick Lagore and Tim Denoyer, I'm Kevin Baxter. Thanks again, and we'll be back soon with another episode.